Good day, guys. Welcome to Forex Walker. Welcome to episode 81. This is an extension of the recap just to talk about the currencies that we mentioned in the previous 2 quarters. I think it was 3 quarters, but this YouTube channel started in the last 2 quarters. So this is the pound SGD. The pound SGD. We talked about how we were expecting it to break this high, and I took profit. But my expectations were to get to the previous shoulder here. I don't know why I said the previous shoulder, but the expectation was a market manipulation on this trend line. This uh, daily time frame trend line where we expected market manipulation here, after which we went long on the pound SGD at the moment in the rally base being this base and the next rally. We expected the market to break after taking off here. We expected to reject to the previous order block over here, and perhaps that will be the end of the interest rate cutting cycle, and the next rally will take off from here. That was our expectations with a negative carry of negative 2.19 points in the long direction. So that is our expectations with the pound as GD, and this being another currency that we picked up on the fourth quarter. This is an update on monetary policy divergence between AUD and NZD, where we ended up reaching the 50% feet, coming back to the previous shoulder over here and taking off on a monetary policy divergence trade with a negative carry of negative 3.32 points, with our two currencies being the Australian dollar holding interest rates and the New Zealand dollar cutting interest rates in that monetary policy divergence trade. And with this previous rally being created as a result of the New Zealand starting an interest rate cutting cycle first, with the Australian dollar starting much later. So this is where the monetary policy divergence trade started. So this will be a rally, and this being the base, and the next rally we expect it to take off from here, but we don't expect this next rally to be as long as this current rally. It might be smaller, but it will actually be at least a little bit bigger because this is a quarterly monetary policy divergence. That means this trade will last for like 3 months, taking off in this direction. So that is the power of monetary policy divergence. Let's look for the pound CAD. The same expectations on the pound CAD were that we would have a drop, and this being a base and a drop lower, that means we're expecting the high that we were looking for. We got it when we were going long here, and we had a few problems. I don't remember which episode it was where I talked about how I took a loss when the market rejected from here and it returned to go lower, but it didn't break this low. So that was the long that we took, and it actually went to the take profit level, and the market coming back while we're expecting the market to break below this low. And for those who believe in buying at the bottom and selling at the highs, this thing will actually break below that in macroeconomic reports, but we are having a little bit of an issue with the CAD going bullish because of the macroeconomic reports and the pound cutting interest rates. So uh, this market might go sideways or it might break below. So that's my expectations of breaking below all the way down there. So with the CAD gaining strength. The pound NZD trade with the NZD being the weakest currency ever had given us the exact drop based rally and it hadn't reversed so far on the last recap that we had. And at the moment, both currencies, I classify them as both weak currencies. That means I will not be trading. I will not be taking trades. But in the general outlook of macroeconomics, I believe that with both currencies being weak, the uptrend may not change. That means we may not get that much of a pullback in this form, insinuating that the NZD might be weaker than the pound. But though I don't really like, I'm an economic divergence and monetary policy divergence trader. I focus on one currency getting weaker and the other currency getting smaller. That's how I take my trades, and I wouldn't be focusing on both weak currencies. In fact, the pound USD might be a trade that you look into. We were expecting, we were going short on the previous shoulder on the previous episodes, and we were not expecting that much of a pullback. But this is a negative carry for those who don't mind taking negative carries. You can actually keep going short on this trade because the pound is getting weaker and the US dollar was suspectedly had suspectedly taken a hawkish interest rate cut. That means it will be gaining strength from here on end, and the pound will be getting weaker. And that's why we're expecting a continuous drop to the bottom in this session. We took our short trades on the euro pound, and this, from my perspective, with both currencies getting weaker, I am expecting the currency to actually go bullish. I'm not saying the euro is gaining strength because both currencies are weak, and that's the reason why I normally focus on economic divergence instead of uh, taking trades on both weak currencies. I would rather look for another strong currency and take a trade on it, or I would rather sell the pound with the USD and sell the euro with by buying the AUD. AUD here did not disappoint. We were holding our shorts. We were supposed to be holding them above here from our expectations of rejection from the previous shoulder, but the economic divergence was quite large, and that's how we ended up with the highest form being here and the market reversing, and a second chance going short was here, and we're expecting a break below this low all the way down here in this Euro AUD trade that we've been talking about for some time. When I was talking about the capital flow, uh, I was talking about capital flow moving towards the northern hemisphere in the festive season in the northern hemisphere. That would be from March to June, and the capital moving towards the southern hemisphere in the festive season of the southern hemisphere being from October, November, and December. That is what I call seasonal. capital flow. And how I trade silver is that I only go long once. That means I take one trade and I forget. This is April 2025, the first rally before the base, and the next rally being here. So that means when I enter the market here, I will be going long and forgetting. That means that is a buy and forget. So what would happen on the last trade that we took here, when I was talking about capital flow, here we were talking about, this is the 28th of October, and we went to below the previous order here. This being the previous low that we've taken, and we went long based on capital flow, just like that Turkish lira, that Euro Turkish lira trade that we talked about. It happens every single year, trading the tourist attract the tourist arrivals in Turkey. So this is how I trade it. Normally, when I look into currencies, I look for a rejection from the 50% feed, the 50% feed, and a drop to the 23.6, the 23.6 here, and an expectation of going below to the previous shoulder. If you go to the lower time frames, you will see a previous shoulder somewhere there, which is not visible in this case. So that is how I trade currencies. But when it comes to silver or commodities in general, I look for the 38.2 and the 23.6, and that's how I go long. And this is the last long that we took, the first one being on the 25th or in April. So this is how I trade silver. It's a trade that you go long once and you forget about it. That is silver. We talked about it, and we talked about capital flow, and this is all how I trade commodities. This is the Euro Turkish lira trade that we talked about, and we went short. We went short for the second time. On the third time, you can see that the market reversed, but I did not take a trade here because I was disappointed by the rally that actually I expected a manipulation, but the rally actually took me out when it reversed again, and that's how I lost my interest in this trade. And as you can see, it did not make it all the way down here, which is the take profit level, but then it took off, and this is exactly what I expected when I lost hope on this trade. So this is a trade that happens once a year, and I always take this trade. It's called a tourist arrivals trade in Turkey. It is normally the arrival of the Europeans in Turkey, because it is winter in Europe, so they move towards the temperate regions, which is the Middle East in Turkey. The USD CAD is responding, but from my side, I would rather, with the CAD gaining strength, I would rather look into trading, sacrificing the USD, the CAD with the CHF, or the JPY, and going long. That's the only way that I will take this trade without the CAD. This is the CHF, and it looks to me that it is rejecting nicely from the previous shoulder, and the next rally I expect it to break above this high. AUD is doing well, and we're expecting a rally from this previous shoulder to continue to break this high over here. The NZD USD will continue to drop. Thank you guys. I'll see you on the next episode. Goodbye.